Tonight I'll be introducing the Actions to Wealth team as we go through the evening. Going to grab screen straight away and have a bit of a look at this market. It has been another, for mine, interesting and slightly unusual week. We'll get on to next on to Julian's macro market overview. For those that have just come out of his Trader Cafe session, I do hope you've got heaps out of it. Like a really good session to me. Do hope you guys have got all you can from it. But an interesting week for mine. You know, we have these, I think interesting week. So we'll go back to dollar index. We'll blow it up a little bit. If Zoom will get this bar out of my way, so I can do. I like dollar index. 3 big up days, 2 average down days, and overall, from where we started, a nice move up. Certainly not a dominant day for the week for the US dollar, but a week where it's gone up. Nasdaq 5 buying days in a row. 1, 2, 3, 4. 1 small down day, and 4 up days on the Nasdaq. US 500. 3 reds, 2 greens. Finished not far from where we started. Gold. 4 downs, 1 up. Finished a little bit down from where we started. Oil, my gosh, oil. The other way with oil. 4 reds, 2 of them big, 1 up. Decent sell-off on oil during the week. Bitcoin hasn't updated for the weekend. Fusion servers are down. Second time it's happened in a month. I don't go much longer. They're pretty good, those guys. I won't like this not working, but again, 1, 2, 3 red days, 2 green days. A little down from where we started the week, but not too far down. And certainly, my understanding over the weekend has continued to buy and pushed up a little bit. And ETH, very similar, very similar. 3 down days, 2 up days, but finished off not too bad, ETH, in a reasonable spot for those that want. It doesn't all make a lot of sense to me, Julian. This is the one that confuses me a little bit. US dollar bullish. I would expect this to start and play out a little bit, and some correlation between this and other prices that doesn't seem to exist right now, which does surprise me a little bit. Market does seem to be making its own way. I'm really looking forward to your macro market overview and a chance to have a look at the macro picture and see what you think is driving these behaviors. Over to you, Julian.
Thanks, Paul, and hello, everybody. Welcome to another trading show. Oh, crikey. Lockdown here, still alive and kicking with me. Hey, look, guys, let's get straight into the charts. I want to just make some comments. From a macro overview point of view, I'm not seeing a lot out there right now, which is any different to the views that I've had for some time. The most important thing for me is this chart now, ignoring the decimal place. This is the chart of the 10-year note yield. It still yields 1.55, as it has done for the best part of most of this year. Yeah, we've had some ups and downs, but it's still yielding 1.5 with inflation. I do believe, Paul, inflation in the US went to almost 6% on a year-on-year basis recently. That's still month on month. It's still slowing the decline quite considerably, and I expect that inflation rate to come down. But really, for me, there's a massive red flag, and I can't get in my head this disconnect. Okay, we keep talking about these bond yields, guys. And the thing about inflation is transitory inflation can last for quite some time. So is it transitory? Yes. Can it last for a while? Well, absolutely. And what does that look like? You know, we know that there's some wage settlements going up in the States. Are they one-offs? I think what's really interesting is what's going on with industrial production around the world, most notably in China and in Europe. I know that there's, the pandemic is coming back. We look to be getting some kind of 4th wave hitting Europe at the moment. That's not good. That will have an impact on the way things are done. But the reality is that the industrial production figures are slowing down. What isn't slowing down is the enthusiasm of the stock market. Now, what I see here is a disconnect between the bond yields at 1.5 and the inflation rate of 6. Something's odd. Something doesn't make sense. Something really has to change. Now, as we saw this week, let's get straight into some of these markets. What I'd like to try and do, we can talk about, oil and gold are going to be handled by Ainslie and some of the other guys. I want to take you on a quick tour of some of the sectors that I look at in the US stock market. And those of you this is a weekly bar chart, and for those of you interested, just follow what you're seeing here. Maybe I should put a candlestick up on this just to make it a little bit more homely for those people who aren't necessarily the bar chart followers. So this is the oil and gas sector, right? So we've seen a big run up in oil recently. What's going on in the underlying? These are the guys who are selling the shovels, who are doing the drilling. What are we seeing? Well, we're seeing the market trading at almost the lows of the year as a sector. So I don't think that's particularly bullish. When you look at materials, now we're seeing some things, right? So the materials sector, that's trading near all-time highs, but we've had a crappy week last week, right? And for those of you that don't, that haven't really thought about this too much, Paul was talking about new highs in the NASDAQ. If we go and look at the daily chart on the Dow Jones, this has been in a bear trend now for almost 2 weeks, by the way. Like, it came off a big ball, and maybe somewhere in here is an opportunity to buy it. But the key thing is there's been a sector shift away, right, from some of these stock markets. Let's go look at some more. Communications, terrible few months. The energy sector, XLE, my favorite ETF, because I think long term it has real value. That's had a terrible week. The financial sector, so for so long, the leader, look at this big rally up. That's now had 4 down bars. Okay, you guys are getting the picture here, right? The industrials had another bad week. Technology, here we are. So we're back on the same gig again, right? We're back on the Apples, we're back on the Amazons, we're back on the Googles again. It's all the technology stocks, all the already highly valued technology stocks. Throw in some retail market. Oh no, hang on, because they had a terrible week too. They're no better off than where they were a few months ago. Right, the real estate sector, no better than where it was a few months ago. Utilities, nightmare all year. Stay away from them because apparently yields are going up, but are they? Right, consumer discretionary, that's the one that's been doing really, really well just recently, right? So that must be coming out of pandemic. The whole world's coming out of pandemic. What's the future holding for that? I think now that we can see industrial production slowing down. But anyway, let's park that. Metals and mining, nightmare week. Oil and gas exploration, nightmare week. Semiconductors, a bright shining star. We're getting the picture here, right? So this is a tech and semiconductor market at the moment. And then finally, transportation had another crappy week after having had some good weeks, still trading near all-time highs, still gonna love it, right? So here's some of the things, right? Everybody's still getting their boxes. They haven't all arrived yet before people stop ordering as they go back to the office. That's very clear in my mind. We'll see what happens if industrial production is slowing. Doesn't that surely mean at some point that the boxes are going to slow down as well too? We will see. But the key thing for me here and all of this, right, is that this is a play for the technology stocks. So the number of stocks that are doing well at the moment versus the number that are just marking time appears to be getting less and less and less. This is traditionally again what you would find in a potential market top. I know I'm sounding like a broken record to all you guys out there. And if you're trading Amazon or you're trading Apple or you're trading Tesla, you're just sitting there laughing at me. And I get that. And I appreciate that. I don't tend to have such a concentrated portfolio. If you're looking at a more broader market overall, you've got to respect the fact that probably not all of it is trading that well. Maybe reflecting the fact that in the real economy, things aren't quite what they seem. And also reflecting the fact that I don't think we're going to a hyperinflationary environment. And actually on that, right, I just want to clear a couple of things up here, right? When people talk about inflation, we've got to be really careful of the language, right? Hyperinflation, there's actually a definition. There's an economic definition for hyperinflation. It means more than 50% inflation per month. Okay, I don't think we've ever had hyperinflation in the States. Maybe we have in the long, deep, distant past, right? Even the 1970s, where inflation was running at 15% per year, it was nowhere near hyperinflation. So people have to be a little bit careful on their language. Are we having a sustained, a secular inflationary move? Well, I believe that we're not. I believe that we're going to go back to relatively low inflation at some point in time. Mostly because it's connected to government largesse and also to the fact that I think that there really is not as much money around as people think there is right now. I know there's lots come into the system, but there was a big demand for it. What will be very interesting will be to look at everybody's figures from an economic point of view when some of these commodity prices settle down a little bit. As we've seen, there's been some significant falls in the energy sector in the last few weeks. Natural gas has had a fairly aggressive move lower. Coal has had a crazy move lower. Okay, we'll get back to this whole thing whereby the market is, right, just the numbers look very high. The value of imports and exports looks very high simply because if they're invoiced in dollars, they cost a lot more because commodity prices have been going up. But volumes, as we saw last week in the analysis I did, are not tracking anywhere near as well as the absolute value for those things. Okay, and yeah, I'll probably skip that. So my overall sense here is that I still maintain this has got the ability to be an analog of 2007, and it's a catch everybody out with a final crash up in the market before we then struggle through 2022. I don't know when, where, or how, but my sense is valuations are incredibly stretched and they need to come back. So that's really my sort of overall sort of word of caution. What I really need to see from here on in is the real economy to pick up and pick up aggressively to justify the stock valuations that we're seeing, especially in the States, but pretty much all around the world. And from that, on that little note, Paul, I think I'll probably quit. Oh, hey, one more thing I knew what I had to mention. For those of you that have been following me for a little while, you will know that I have been telling you for so long that I think, and Paul will tell you how many years it'll be, that I said coffee was on its way to 250. Well, guys, it got to 230 last week. It has only taken 3 years, but we're finally almost there. So between 230 and 280, I don't really have an opinion about where it's going to go anymore. Just to the fact that coffee is going to get more expensive. I'm afraid that, guys, that when you go to Starbucks, it's going to cost you a few cents extra on your soy almond latte. I can't do anything about that. It just seems to be the way of the coffee market at the moment. It seems that supply and demand are more into balance at $230 than they were at 90, which is where I think we were making those calls for a big rally some time ago, Paul.
Yeah, mate, I was just going to say, I can't remember exactly what you were buying it at, but it seems a long way below 230, mate. Well done. And let's see if it gets to 250 in the coming months. Thanks for joining us today. As always, mate, great to have your insights. And we will watch these markets with real interest. They do appear to me, as you're saying, it's really some really key times, some really interesting times ahead. I think, for us, the potential to make some really good money is coming along. I'm looking forward to seeing it unfold and getting your view on it as we go along. Cheers, mate. Thank you. Next up, we've got Alexis to talk fundamentals. Alexis, I know you've had a massive week in the trading world. I'm really looking forward to getting up there today and seeing what you think is going on with the fundamentals this week. Alexis.
All right. So that's I had an interesting week, and I think some of my biases have kind of shifted a little bit, and let me share why. Okay, so I'm going to share screen, and let's look at one of my favorite charts, the Aussie and the China renminbi. So I think last week I mentioned that that if the RMB breaks through the upper horizontal level, we should see the Aussie follow suit, right? But I think what happened was it didn't go through, and the moment that wall was hit, a very clear weakening of the Aussie happened. So I think it's really interesting because it is really if RMB doesn't really move, I think the Aussie kind of finds it hard to move as well. So again, you can see the renminbi over here is really hitting a wall, and the question is this a good buying opportunity for the Aussie dollar? So when we kind of look at the Australian dollar on its own, right? And I'm going to look at the Aussie USD over here. All right. The question is, it has kind of gone down to, I wouldn't say it's testing a horizontal level here. I think there's a little bit more downside to go through this, but maybe look out for buying opportunities in the next couple of weeks. All right. Because I think China is still on its road to recovery. I mean, it's very focused on bilateral or multilateral growth. All right, according to I think President Xi's speeches last week on the Bloomberg forums, that they are really focused on growing together as a world economy. So we'll see whether it does that or not. And I think something interesting that really came up was when Gina Raimondo, the Secretary of Commerce for the US, came in and started talking. And I think she's this whole week she's doing a Indo-Asia tour. So she's visited Japan, she's come down to Singapore, and within 48 hours she's off to Malaysia, and she's going through her tour. So I think they are really focused on bringing trade, up again. So one of the places that they dropped out of when Trump was in power was this. I'm going to show you here. This was done. I think it's too long for me to read out. So this CPTPP, right? So I think when Trump was in power, they kind of dropped out of this agreement, right? So there was a lot of talks on whether or not the US will come back into some kind of trade agreement, and currently the countries involved are more of the Asia Pacific countries. So the question posted was really, is she interested in coming back to that? Now, I can see that she's kind of considering this question very seriously. The answer is no, of course. They are not going to be coming into the CPTPP, in the near future. But what she has been focusing on is the improvement of trade relations between the Indo-Asian countries, which is Indonesia, Singapore, Malaysia, basically the Asian countries, right? And the concern is about supply chain. So I think due to the pandemic, there was a realization that the US was not able to produce certain products, and semiconductors is one of them. So they were not able to produce enough semiconductor materials, and there was a gap where a lot of people are still in search of semiconductors, right? There is still a shortage, and and it has brought concern to the US that yes, they do want to be a bit more self-sufficient, so they want a bit more domestic supply, but they are also wanting to create good trade relations with their what they call their friend countries, so that they can have friendly trade as well. So with that in mind, it brings on to mind the other questions of what is Biden's stance. And I think based on what she has shared, Biden's stance is very pro relations. I mean, despite what the media is saying, they are really working hard to kind of increase jobs. So it's a bit of coinciding with the Green Movement. Again, I think nobody can ignore the Green Movement. The last month, there was talks all over the world about the COP26, about green energy, about the concerns about the environment. So the US's concern, at least based on the Secretary of Commerce, she's saying that okay, they do recognize the fact that renewables are important, but they also want to do it while providing and creating opportunity for new jobs. So that is really interesting, because what they are focusing on now is really research and development into kind of getting the only way to kind of improve environmental factors is via research and development. So they're spending a lot of money, to get this energy sector changed into a clean way. And to do that as well, they also have to kind of focus on providing jobs. For example, the coal miners. If you were to cut coal from the energy sector, you have to kind of provide jobs for the states that that have huge focus on coal as part of their jobs. So it's really, really interesting to kind of see where they're getting it. I think a bit of urgency is kind of seen. They are trying to improve the economy, and they're working really hard to do it. So previously, I was talking about debt, right? And thinking that, okay, there might be a weakening of the US dollar, because unless they solve the debt problem, it's going to be a big question mark on whether or not the US dollar will sustain. But after watching the whole week's worth of talks and discussions, I think the US dollar is going to be pretty flat for a while. And I think a bit of range trading is going to come into play, because while the government is actually really, really strongly trying their best to kind of fix the problems, unfortunately, they're not going to start on debt first. They are focusing a lot on R&D, on renewable energy, as well as, most importantly, providing jobs, right? Providing jobs for their people. So I think unemployment is something they're battling right now very, very seriously. And if they kind of can transition the job market amidst all their plans, I think the US dollar does have legwork. All right. So it's going to be, for me, it's when I look at the charts, and let's pull back to the charts, I think it's going to be a big range trading moment. We already had a very nice bullish rally on a lot of the dollar pairs. All right. I don't think the dollar will really fly very high, but what I do think is the dollar will trade positively, and we'll look for buying opportunities every time it does a pullback. All right, because I think Biden is really working hard. I mean, despite his methods, right, he is really working hard into trying to improve the economy for the people. I think that's one of the most important things we have to look at for governments, whether or not what are they trying to improve. So if they're trying to improve jobs, if they're trying to improve, replace jobs for people who are losing jobs, I think one thing to look at is the job market, the unemployment figures that are coming up, and to see whether this really sustains. Because if it does sustain, then yes, there is an opportunity. There is an opportunity over there to find all these buying opportunities whenever the US pulls back, right? So we have a couple of US dollar pairs right now. I think I'm looking for opportunities of literally buying opportunities, but be a bit cautious. Like I said, I think the US dollar is going to range trade for quite a while. We are entering the end of the year already. So I'm going to be very cautious about buying the USD, but also the moment I find pullbacks hitting certain horizontal levels, I think we are going to range trade the USD for the next couple of months. So unfortunately, range trading is not a favorite, I guess, of trend traders, but it is kind of the story over here that a big range is going to be seen in the USD as as people try to kind of position themselves around the US dollar. So other than that, I think on the Aussie dollar, I'm also looking for buying opportunities. All right, but again, it takes a while for this to set up. And again, it's based off the positive China economy. All right, and I would see the Aussie dollar softening for the next week or so as it comes off, as it sells off and touches certain horizontal levels. But overall, on the medium time frame, I am looking for buying opportunities as well. So maybe in a week or two, I'm not sure, but definitely a little bit more softness expected. So my focuses next week will be a little bit more on buying opportunities for the Aussie, the US, and I think the pound. The pound, I'm still waiting for it to move. There's some of the pound pairs has already started off its move. Pound Swiss has already had 3 buying days with a bit of retracement. So again, we'll see whether this sustains as well. But I think the pound opportunity will come a little bit faster than the Aussie and the USD. So my focus on the next week is still pound focus, but still one eye on the Aussie and on the US to see whether it can catch up in the next 2 or 3 weeks. So we'll see how that works. But bearing in mind we're into the last 2 months of trading, we might get a little bit slower on the currency front. But so let's see where it goes over here. Over to you, Paul.
Cheers, Alexis. Thank you very much. Looking forward to catching up with this week about what you did last week. Sounds really exciting. Look, we've had a look at the macro market view. We've had a look at the fundamental view. Let's have a look and see what the data is telling us. So our data expert today is Ash. He's going to come in and talk cotton seasonality with us. Ash, what stands out for you?
It's a few things, actually. I mean, just to kind of touch on what Alexis was talking about with the pound. The COT data on the pound is probably the most interesting of the currencies this week. Not so good with the 36-month, but we see the near term at 97% and the really near term at the 6-month at 100%. Now, one of the reasons that we're starting to see some interest in the pound is because of the Bank of England's Governor Bailey, is intimating that he's really concerned with inflation, and he is probably putting his head above the parapet with rhetoric. I mean, obviously, we've seen other markets and other currency and economies move on their interest rate, but Bailey's putting his head above the parapet when you compare them to the dollar. You know, what's going on with the Fed, what's going on with the ECB. And he's basically saying, this is a concern. And it was very close last time whether they were going to decide to push the interest rate higher. Now, we've got another another decision coming up in December, and we're starting to see some interest with the pound. So for that reason, I think the near-term COT data is of interest. Normally, the 36-month would be the one that I'd want to focus on. But for this particular period, I think the near term is a lot more interesting because 18 month and 6 month, and we've got an event coming in a matter of a few weeks where the likelihood is we do get a push with the pound to the upside. So that suggests that if it's not priced in already, the dips will be an interesting place to start looking to buy the pound. If we then look at the seasonal chart, what does that tell us? Well, it looks like this particular week, we're right at the end of November, right the way up until the first week in December, we do tend to get a pretty good run on the pound. That's a pretty steep move that we see on the seasonals, coming into alignment. So I like the pound because this would suggest COT data is in a line, seasonality is in alignment, and also there's a fundamental driver that, even though supposed, is certainly there as some kind of indication that there would be some value to the pound in the coming weeks and in the coming months, and particularly with the way inflation is going. I'm also just going to touch on the stock market as well, because we've been discussing the stock market. Julian's been discussing the stock market. And particularly talking about the tech industry. And look what we see here. E-minis, the NASDAQ 100 stock index, very, very low on the 6 months, down to 1% on the near term here, 21% on the 18 month, 21% on the 36 months. So only 1% away from that bearish region. Anything below 20% starting to get a lot more bearish on the NASDAQ. Now, we know that COT data is not a timing tool. So really what we want to see is that the commercial traders are losing their interest in the NASDAQ and the S&P. You see the S&P down here as well, very low on the 6 month, very low on the 18 month, and still it's not near enough bearish on the 36 months to be that much in stress. But let's just have a quick look at the NASDAQ and dive into what the buyers and sellers are doing here. So we've lost the net position. The red line here is telling us that the sellers are increasing, while the green line is telling us that the buyers are just starting to dissipate a little bit. They're just starting to ease off a little bit after them being more interested in the bearish. You can see that the green line is above the red line there, but then there's a little cross here. So the cross is saying to us that the sellers are just starting to increase their power over the buyers at this particular stage. Well, let's see if the seasonality can help us out with this, because this tells us there's a warning. It doesn't tell us to sell. It just tells us that there's a warning coming. There's a warning now, and there could be some downside coming. So let's see when the seasonality would suggest that downside would come. And the seasonality, we see that it tends to rally right the way up until the first week in December, ease a little bit, rally into the end of December, and then start to get into a little bit of a choppy range before we see some downside. It doesn't look that significant, but the downside comes in around about the middle of February. Now, that would be in alignment with COT data as long as it remains down at these particular levels. So could be 2 to 3 months away before we start to see the easing back down with the NASDAQ. But I'm certainly interested in signs and signals now to the downside, because it may come a little bit earlier. The Christmas period tends to be pretty good. We have seen some overinflated retail sales numbers recently, which could suggest that a lot of people have done their Christmas buying early. So the next retail sales number will be watched relatively closely, and that may well push us to this particular down period just a little bit earlier, maybe sort of as the turn of the year comes, maybe January, maybe the start of February rather than the middle of February. But got the button really ready for a sell signal from the NASDAQ and possibly the S&P as well. With the valuations where they are, I think we should be really kind of making sure that we are focused to make sure that we don't get caught in a long that we don't want to get caught in. And if there is a short, it could be quite lucrative. So to summarize, pound looks very, very good into this week. The NASDAQ is starting to show some signs and signals that we should be looking for potential downside within the next 2 to 3 months. Back to you, mate.
Cheers, mate. Continues to be a fascinating market for me. It really does. And we'll be interested to watch how this NASDAQ does play out, because I do have a feeling that if the NASDAQ does pull back, the whole stock market around the world will pull back. So it'll be interesting to see when. It'll happen eventually. It'll be interesting to see when it does happen.
Yeah, I mean,
Sorry.
looking for the catalyst is the trick here, mate. Really, I mean, you look for catalyst in the Nasdaq, for downside, you won't find them. Earnings stellar, companies in this lockdown situation that is sort of starting to happen again. We know what happened with the tech market when the lockdown happened. They did really, really well because people need tech to kind of improve the way that they're going to work. So the catalysts just aren't there, and that's the key here. What is the catalyst going to be? I mean, it'll probably come out of nowhere. We probably won't even know what it is until it's a week into its play.
Yeah, I reckon there's a great old saying in trading, Ash, the cure to high prices is high prices. Eventually it just gets very high and people don't want to buy it up there. And, at the moment, everyone wants to buy it up there and good on them. But, every market corrects. And let's not pretend the Nasdaq hasn't corrected in the big run up. Of course, there's been corrections and there'll be more. There's no question about that from my opinion. As you say, what is it just high prices that push it down or is it something else? Likely to be something else at this stage. We'll watch some Fed meetings pretty closely as well on what they're saying with inflation. Cheers, mate. Thank you very much for that. Let's talk gold with Ainslie. Ainslie just keeps flattering to the sea.
Honestly, Paul, seriously, what is it doing to me? But let's be patient, is all I can say. Don't have a choice, actually.
That's the way it works, yeah.
We just don't have a choice. So let's have a look at the gold chart because what is interesting about it is after having a few little heart attacks during the week, especially when you can see some of these moves, and I'll just circle them down here on the 4-hourly chart. There was that one, there was this one, there was this one, and there was this major one as well. A couple of these low test bars in the middle of the range all happen within about half an hour. So 1 minute you're looking at the chart and thinking, okay, we're looking at a good bounce, this is going well, and then the next minute your heart's in your mouth because you've dropped $15 in 15 minutes. So it's been very sensitive. It's been all over the place. But until I actually sat back and looked at the market when it's closed, which is always a good thing to do at the end of the week, is we're sitting in this really tight range again. And that would seem to indicate, one, we're either going to go to the downside and retest a level down further, or we're just going to sit in this holding pattern. And I'm talking about the holding pattern that we would like to see come to fruition with the seasonals. The seasonals are now looking for a move from about the 20th, 21st, which would happen to be this weekend, to move north. It's a seasonal bias. Given what's happening in the market and everything's topsy and turvy, I am going to go with the theory that I think there might be a bit of a retreat to something stable. That's what I'm hoping. That could be the impetus to see it move a bit higher. Come back down to the daily, and let's have a look at the daily chart. Oh, sorry, before I even move it, we're looking at this, the divergence on the MACD, and we all know the divergence on a MACD is a pretty good indicator of the market going back up again. How much further? Don't know. But look at this. We've got this low here and this low here, but on the MACD histogram, not the signal and the MACD line itself, but on the histogram, which can be a little more sensitive to indicating a turn or a potential turn in the market. We've got that there. We've got a divergence happening on the histogram. We've got no really good direction on the DO plus, DO minus. The 80X is below the 25 line. Same over here on the daily. But when you look at where this level, and we all know like gold likes levels, I'm trying to work out where and why it's come back to this 1845 level. And it's a previous level of a previous monthly level of resistance. So broke through, came down, tried this first level of R2 on the monthly, this month cycle, and then back down and it's retested another previous level. So what a surprise. I mean, you just have to dig a little bit with gold, and it's always good to do the digging when the market is closed. Where to next? Let's just see. We're just consolidating. We're going sideways. We're in a holding pattern. We're at the bottom of the level, at bottom of the range. What a surprise. It's a wait and see at the moment, Paul, I'm afraid. So nothing nothing fantastic, but I'm just let's see if it comes back and retests the 1830 level, or whether it's just going to say, I'm going to play ball finally with the seasonals.
And just having a bit of a look back on the chart, and the 4-hour chart, I don't look at the 4-hour chart on gold, but that second or third last bar of the week has been the big move for the last 7 weeks. Either the 1 o'clock or the 5 o'clock bar, the second or the third last. So we see it this week. Something happened the week before, something happened the week before, something happened the week before. Not always any reason people are buying and selling. Do you think this is people closing positions for the week? Do you think these guys have been long trying to get out?
I don't know.
Very interesting bar. Well, interesting to have
It's been really interesting. Like I said, it's not even the 4-hourly bar that when you because I've been tracking it, if you were down on an hourly bar, you'd be having an absolute heart attack with how quickly it's moving and how quickly it's flicking around, which is, unless there's news. I mean, obviously this was the news on inflation was worse than expected, and obviously gold took off. But during the week, there are some fairly hectic moves in there that we've had this week, and some have reversed on a dime as well and gone back up again within half an hour. So it's just being difficult.
It's interesting, isn't it, Ainslie? If you turn that second last bar around and go the same distance the other way, looks like a good week.
It does.
And it's clearly there's a bit of movement late in these weeks that are really impacting gold. Look, we'll come back and talk to you about oil, which is oil's the one that surprised me this week. That move has surprised me. Once we've had the recording of Shukri and the crypto stuff. Mai, you ready to play the recording from Shukri and what's going on in the crypto world?
Hi guys, let's review this week. So this is Bitcoin. Again, great that it went down. I'm just going to show you the weekly chart. That's for this week. It actually went down by 20%. That is the November correction here. It went down by 20%. This mirrors the 30% down move in November in 2017 before things really, really went up here. Right, look at that. And we hope that happens. Now, just remember the target for Bitcoin is 98 according to Plan B. Nothing much is happening on Ethereum. Again, failed. Very disappointing that it failed here at 5. But look at this, guys. The AVAX ecosystem is going up because it is a DeFi fall. Those of you in Crypto Moon, I showed you an example of a farm, right? They're just having a lot of farms now. So I would say that, I showed you that farm. If I wanted to stake, I had to buy AVAX and another pair. So this is really driving this. It is really going up. So while Bitcoin rests, the other alts pump, right? Let's look at the alts that are pumping. Games, Gala is games. Rose is at layer 1, University of California, Berkeley. Arweave is storage, of course. With the metaverse requires more storage. This is the storage platform for Solana. One Harmony, AVAX, we said that. Render, I don't know what Render is. I think it's about rendering pictures and all that. You see Eagle pumping because of the great HoloRide IDO, which Audi is using. Awesome. CRO, okay, they're going big time now. You have Holo here, Immutable X, right? How many times is Immutable X up by? 60, 70, and that's it for this week. And just remember that, have a very, very good Black Friday, okay?
Yeah, great, interesting call there from Shukri. I was talking to him in the West session earlier on. We're talking about the fact with Simon that if you're in a trading view and you're signing a trading view during the year, just forget it all. Pricing for trading view for 51 weeks of the year is rubbish, and pricing for trading view on Black Friday is the time. If you're looking for getting into charting software, you'll see a lot of the crypto guys use trading view, but you can use it for Forex as well. If you're interested in getting a trading view, then I would keep an eye out on Friday, because the sale on Black Friday is nearly as good as our Access to Wealth sale. Not quite as good, but nearly as good. Ainslie, look, I get gold, a little bit up, a little bit down. It's a bit choppy. It's hard to trade at the moment. But what happened to oil? I don't get that. That is a decent sell.
Okay, so what happens when the two major users of oil, let me just show a screen, get on and have a little Zoom chat and say, guess what, guys? Oil's too expensive. We've been very, very polite. We've asked the OPEC nations. We've asked the Saudis and the Russians to reduce the price by increasing their supply, which they had the opportunity to do, which they turn around and very politely just said, yeah, no, not doing that. We have a plan, we're sticking to it. So President Xi and President Biden decided that they would help things along by releasing their reserves. So that was Thursday, Friday. So we saw a major pullback down here as well. So there had been a lot of talk of that happening during the week. And I think the combined effort of some of the COVID news coming out of Germany and Austria, where we've got European nations getting, Austria, I think was they're having a mandatory vaccination, and Germany are going back through another wave. So when major economies are talking about trying to lock down things again to try and prevent the spread, I know Germany is in all sorts of bother. You know that something is afoot. I think there was a bit of a culmination this week. We were 11% off those highs, those $84, $85 highs, and it's just been watching it come down, come down, come down. Now, are we going to get to $102 a barrel? I think it was a Goldman Sachs call during the week. That was before there was a little chit chat with the two major powers and the two largest users of oil, two largest consumers of oil in the world, saying we're not really happy at these prices, and we're going to do something about it. So that is basically what had happened. It is into a bit of a free fall, but if you have a look down here on my daily chart, this is where we topped out, and you can see it's sort of like it did struggle on that third occasion to try and break that $85 level. Came straight back down, huge. Let's do a quick technical analysis here. We did a huge bearish engulfing candle on a triple top. We should have expected something to come back down. Then we had three failed moves higher to get and close above a monthly pivot. And then we just had the fundamentals to just nails in the coffin the whole way through. So the end of the week, from the middle of the week right through, we started to hear about the potential reserves being released into the market to flood the market. And then we've had it actually happen, culminating with what was happening with the COVID situation in Europe. And, regardless of it coming through on into the winter, we certainly have some pretty hectic fundamentals really affecting it. It's come down to this level here, which was a really, obviously quite a strong zone in through here at the $75 mark. But whether that holds, whether the market will actually absorb what's happening, let's see, because the alternative to fight that is the OPEC nations just turn their tap off a little bit to try and bump it back up again. How are they going to respond to what's just happened to them in response to the way they thought they were handling it will be a very interesting thing to see next week transpire. So let's wait and see, shall we? Thanks, Paul.
Cheers, Ainslie. I will certainly be watching that with some interest. We had a long-term long on oil. I didn't love price running back at me, so we will watch it with some real interest. Thank you very much, Ainslie. Rightio, that is, we've had a look at gold, we've had a look at oil, we've had a look at crypto, we've done our macro view, we've done our fundamentals, we've done our data. Now it's time to have a look at currency indexes, not individual currencies versus individual currencies, but currencies versus all the currencies. What do you got for us this week, mate? US dollar been an interesting week for it, hasn't it?
Yeah, the US dollar has been actually a pretty kind currency to me for the past 3 weeks. Yeah. So in lieu of that, the dollar is still rallying, and I still unable to find a good horizontal level that might prove that it might stop in this momentum. Yeah. So as such, I'm still going to rank dollar higher up in my list, and I'm still going to long it. But truth to be told, I might be a little bit careful at this area. Yeah. So this coming week, Monday, this will be the only possible horizontal level that's for the short-term horizontal level that might have some resistance. Yeah, so for this coming week ahead, Monday, I will keep a lookout to see if price continues to rally. If it does not, then I might take a break at dollar and see if either Tuesday or Wednesday give me a chance to do it. Yeah, but other than that, USD is still pretty strong. And my analysis is actually pretty much the same as last week. Kiwi is still in the box, no idea where it's going. Canadian index is still in the box, again, no idea where it's going. Now yen actually it is still in the box, it is still consolidating, but what interests me is that the consolidation in yen is actually much more tighter, and whenever I see a very tight consolidation, I'll be really keen to wait for a breakout move. Yeah, so my past experience is that when it's such a tight consolidation, the breakout ought to be that the preceding movement ought to be powerful enough. Yeah, so keep a lookout for yen. Yeah, and then now pound is weakening, and price has reached a pretty good horizontal level. So this coming Monday, I'm going to see whether let's have a look at the 4-hour time frame for pound. Yeah, so for the pound 4-hour time frame, you can see pretty consistent lower high, low low, lower high, low low. So what I'm going to wait for next is for pound to do this. Then over here, that's the exact point whereby I'll be really interested to actually put in a pound short positions. Yeah, so let's see whether pound actually breaks that level. I mean, that would be a very classic break and retest. Other than that, Swiss, very nice horizontal level, very nice trend line channel. So Swiss, Aussie, and Euro will still be the same. I mean, they're still gonna on its downward trajectory. Yeah, so they all have ample space to actually go for a short position. I don't, especially Euro. I don't see anything significant enough, especially such a bearish break of this level. Yeah, so it doesn't seem like anything is currently in its way to actually stop it. Yeah, as such, for this coming week ahead, my team is still going to be the same. I'm still going to short Aussie dollar, which last week I've done it. Got a very nice trade. So I'm just waiting for price to actually break and retest this level. Going to jump in another position. Dollar Swiss from last week, wanted to long it. When price comes here, I don't have a relevant price action for me to jump in, so it's a pity. But I've jumped in later part. Yeah, so price is still just slightly above my entry level. Now I'm still going to look for opportunity to long dollar Swiss. So this is my trading plan ahead. Waiting for price to actually do this. Up. That's the wrong color I'm using. Up, retest, and go up. Yeah, so I'm going to trade at this level and see if price is going to give me the opportunity. And the last pair which I will be spotting out for will be Euro dollar. So you can see that price has already started its downtrend movement. Very nice downtrend movement. Consolidation, break, retracement. So now price is either going to consolidate here and break downwards, or be a standard break and retest. But whichever that movement is, keep a lookout. We're bound to have pretty good trading, shorting opportunities at this area. Yeah. So just keep a lookout. Now the only danger is that I'm heavily invested in dollar, so manage the risk. Yep, that's all for me.
Cheers, Lloyd. Thank you very much for that. Always interested to have your perspective on these things. It is nice to have a different view. I think it really does provide us another technical view and sort of more less specific, more across the board view of the currencies. Thank you very much for that. Next up, we're going to have the recording of Orlando and the US dollar. Mike, can you play the US dollar analysis for Orlando, please?
Good morning, traders. Trader O here, and let's talk about the US dollar. So last week we saw a massive bullish breakout on high inflation data of the US. Actually, that was 2 weeks ago, but it really doesn't matter. What I want to show you is this. Right now, the DXY is trading at a massive level, right? Let's grab the daily chart. After breaking with those pandemic lows at around the 94.60 level or so, we are seeing price being capped to the upside by the 96 level. Now, this is another massive level. Actually, let's go to the 4-day chart or so you can appreciate better what I'm talking about. So this is and has been a very strong pivotal level in historic price action on the DXY. Just before price broke with the 96 level, this is where we saw some buyers jump in, and of course, midterm short or bears taking profit. Then we saw the same low in June 2019, and a base formed in March 2019, and a high right here July 2018. And if we go further in price action, you can see that this level has been quite pivotal. If we go back to 2014, So, massive level that we are seeing right here now. The DXY close quite bullish, close above the 96 level. That a very bullish daily candle. And if we go to the lower time frames, right? If we go to the lower time frames, actually on Friday, I traded the long side on the US dollar on this flag breakout on a retest of the previous low. So the bullish structure in this market is pretty much established, right? After breaking up with those pandemic lows at around the 94.60, it's very well established. So next week we will be looking for longs on the US dollar and longs only. Now, where are we going to find those lows? Because if you notice this, the top or the level that capped the upside on the 17th, which was Wednesday, and on Friday it's basically the same. We have a flat top right here at the 96.25 level. So we need to wait and see what the open brings, right? If the US dollar opens higher, I will not be buying it. I will be buying, however, a retest of the 95.85 level or so, even a deep pullback towards those previous lows at around the 95.60 level is still very much bullish to me. Now, if the US dollar, well, in this case, the DXY breaks with these lows, I will not be shorting, even though we could get a pullback towards that 95.20. But I'm looking to trade the impulses, and right now this market is extremely bullish. Now, where am I going to play this? First market that I'm looking at is the pound against the US dollar. I actually shorted the pound against the US dollar. This was my trade on Friday. Closed half at around 45 pips or 50 pips, and then the other half got stopped out at break even. But in the what I'm looking at is again a continuation to the downside on a very weak pound and a strong US dollar. This is one of my preferred markets to trade a strong move. Or a strong bullish move on the US dollar, given the fact that we are looking at a weak pound because of how dovish the Bank of England came at a couple of weeks ago on the monetary policy report. So this is one of my preferred markets. The other one is the Kiwi against the USD. Again, I do have a short position here, shorted the breakout of these lows. Held throughout this rally, and what I like about this setup in particular is if you look at the daily, it was a break retest of the 70-80 level. So a strong USD would bring some very bearish pressure in this market, and a break of the 69.80 would be awesome for shorts. Maybe even a break and a retest of well, this week's lows for at least a retest of September and October lows. So this is my plan for next week. Have a great trading week.
Cheers. Thanks for that, Orlando. And now it is time to get the technicians 2 cents worth. Geoff, let's hear what you have to say about the market for this week. We're going to wrap her up after Geoff. Be right on the hour for today. Been really good sessions, and hope you guys have got lots out of it, and that you are getting real perspectives on what to do this week ahead. Geoff, over to you, mate.
G'day, Paul. G'day, everyone, and thank you for the intro. Let's take a look and see what we can find. 4 on the list this week as far as game changer bars are concerned. First of them, of which is Aussie Kiwi. Now, Aussie Kiwi is a little bit close to the bottom of this, this low, basically, for me to trade into, certainly on a bar of that size. So whilst I'll take the hint that the direction is going to be short, I would much prefer to see a pullback in that before I entered. CAD Swiss is next, and I think this is the best of the game changer bars, frankly. I've got a, pardon me, a big key reversal bar sitting here, and it is, to my mind, at a pretty cool level. I've got a double, if not triple top sitting there, and this could well be the lower high on that. If that's the case, then we should see price come down to probably this level here, and I'll be looking to target that as a profit area if I can get into a short here. Now, I would be prepared to trade this bar if tomorrow we don't open with a massive gap in the market. That will be my focus. CAD Swiss short. I'll probably be taking first profit round about this level here. That's CAD Swiss. Third is Euro Aussie. Euro Aussie, you probably got to take on trust because the euro is not the strongest currency on the board for sure, but of late neither is the Aussie. I do like the bullish engulfing bar followed by a low test bar there. So I do think this is in a good spot. It'll depend on what happens with gaps over the weekend as to what I do here. But similar to CAD Swiss, I think it is a fairly decent bar that we could look to trade. Daily chart, yeah, I'm not too keen to get in there yet on the daily, but the weekly does look okay. If we don't get a gap in the market, then I think entry here, stop loss here makes sense to me. Dollar yen is next. I hate this currency pair, hate trading it, but it has given us a second game changer bar sitting here. The interesting part is that we were looking for it to play short on dollar yen last week, didn't set up, but I like the fact that it's come back into this range. The range that I mean, of course, is this this descending channel. It's not right back into it, and that's kind of a problem until it does get back in there and give me a lower high sitting, or probably as a retest of the underside of that channel. I'll probably be reluctant to trade it. I'm always reluctant to trade it, but if it sets up, then obviously I would do exactly that. Now, my trade of the week last week was Aussie Swissy, and I'm still there with Aussie Swissy. Now, it took off like a rocket early in the week, but hit the proverbial brick wall and came straight back to this level, but it failed to close underneath it. So for that reason, I still think we've got a nice technical setup here. We've got a break and retest of this longer term on a weekly chart trend line. It's at a confluence area of a horizontal level, and it is also the bottom of this channel. So I do like the confluence there. I would like to see a setup, of course, before I traded it. Not sure where that's going to come from. Perhaps as a false break of this trade line on a daily chart. So I'm probably looking at Wednesday or Thursday before I see that, if indeed it comes. If I get a higher low, however, off this confluence area in the meantime, then that's exactly what I would be looking to trade on Aussie Swissy. I do have a few this week that I'm looking at. The next of them is Pound Aussie. Pound Aussie for the similar reason to what I've just described on Aussie Swissy, in that we are at a top of a range. I call channels a range. Anything's a range to me. If it's bouncing off something, then it's a range. So this could go either way. I've got really no directional bias other than we are at what I call an inflection point. It's a horizontal level through there as well. So it's either break, retest long, or back underneath, retest short. Don't know yet what that's going to look like, but it's certainly on my watch list. And the last of them is CAD Yen. Now, CAD Yen, and I know CAD Swiss was a short on the game changer bars. This to me looks like it's a breakout long and a retest of that horizontal level. It's probably a little bit of a confluence there as well. I haven't got that trade line in, but there is nice confluence there, break and retest. And I do see this as a buying opportunity on the monthly chart. It's obviously not going to be traded on the monthly chart, but there's that confluence I'm talking about. We are coming off that level, or it's more of a spinning top than anything, I suppose, last week's bar. But the daily chart is exactly the same as I've just described on the previous three. We are at the extent, if you like, of a range, this being the descending channel, and I am looking for a higher low to trade that long, targeting obviously the top of the channel. So that is pretty much where I'm at for the week, and that is my 2 cents worth.
Cheers, mate. Always nice to have you wrap up the show and give us a bit of a look at these things. Thank you very much for that. I hope you guys who are listening have had a really good chance to have a look at the market from a number of different views so far today. We've gone through it from a point of view of the macro overview. We've had a look at the fundamentals. We've had a look at the data. We've had a look at oil. We've had a look at gold. We've had a look at crypto. We've had a look at currency index. We've had a look at US dollar, and we've had a look at the technicians 2 cents. That's a lot of different ways to have a look at the market. Pick through them, pick the parts that work for you, and put them to good use this week. And remember, stay calm and make good decisions. If you do that, it all works out in the end. Thanks for joining us. We'll be back next Sunday. Do take care. Trade well.